The second subsidiary books we need to consider is what we call the purchases day book, or what we call the purchases journal. This is the direct opposite of your sales day book. This book is used for recording credit purchases. So this is the book for recording goods bought on credit from the suppliers, and it can be referred to as the purchases journal as well. Addition of this purchases journal is done monthly or weekly. The total will be posted to the debit side of the purchases account, and credit and the various customers will be credited with their personal account. Various suppliers will be credited with their personal account. It looks like the same, so we're talking about purchases day book. The same pattern, date, particulars, folio, which is used for reference purpose. Then finally we have details. Then we have our total. So it's the same schedule. Now let's look at a question that will help us. Write up the purchase journal of Tayo and Sons and post to the ledger for the month of February 2014. For the month of February 2014. What do we do with that? Let's quickly fire off. Let's see our solution. So we shall have purchases journal or purchases day book, whichever one you want to call it. As usual, dates column, the particulars, the folio, the details, and finally the total. So we'll go back to the question. We have bought from Coca-Cola 12 crates of Coke at 120 each. So that date is February 12, 2014. So 2014, February 12. The supplier is Coca-Cola. What do we buy? What did they buy from there? 12 crates. 12 crates of Coke at what? At 240 naira each. At 240 naira each, we have that value to be, that will give us 12 times 240, 12 times 240, and that is 2,880. So 2,880. So that is it. I want to reduce my folio region. Okay, then that is not enough. I think another purchases was made. 5 crates of Fanta. So we have 5 crates of Fanta drink, or 5 crates of Fanta at 120 each. 5 crate of Fanta at 120 each. That will give us a total sum of so 5 times 120, that is 5 times 120, that is 600. That is 600. So that is 600. When we sum up, it will give us a total of 3,480. Any trade discount present? Any trade discount? We have trade discount of 20%. So less discount, 20% of 3,480. So 3,480 times 20%, that is 696. So 696. When we less this, we send the total. Send the total to that will be 2,784. And when that is done, the next is to pick the order bought from PZ Limited. From PZ Limited. So the next supplier is PZ. Then what did they buy from there? From PZ we bought 140 bags of flour. 140 bags of flour at 10 naira each. At 10 naira each, and that will be 1,400. 1,400. I can label this purchase ledger. That is the reference purchase ledger. So 1,400. What does again was purchased? 40 soup at 2 naira. 400 soups at 2 naira each, and that will give me 800. So if I sum up, if we sum up this, it will give us 2,200. Then less trade discounts of 10%, 2,200, and that will be 220. So we are going to less 220. So the difference is 1,980. And when we sum up the two values, we are going to have 4,764. 4,764. And that is what we are transferring. Transfer to purchases ledger account. So we'll now move to purchases. So we have purchases account. Then we also have the various suppliers account. The various suppliers account. We have 3 of them. Sorry, 2 rather. We shall open one for Coca-Cola. Then we now have PZ account. So February 28, sundry The total will come here 4764. Is that the total? Yes, 4764. Is the total. Then the purchases value that we were owing Coca-Cola is 2,784. 2,784. So Coca-Cola, we shall create Coca-Cola 2014 February, let's check the dates, it's very important. February 12 purchases. The amount is 2,784. Then 24. What date was that? February 17. It's very, very important to put it here for PZ. February 17. And the total amount is 1,980. February 17. Purchases 1,980. Your currency value is very, very important. So this is how it's being posted. Okay, so that is what we call our purchases day book. So this is how what you prepare, this is how it will be posted. The next subsidiary books of account we need to look at is the sales return journal, or what we call returns inward journal. This is used in recording goods that are returned by a customer, and the aggregate, that is the total of it, will be transferred to the debit side of the returns inward account, and the various customers' account will be credited with the value returned. So that is what we call the sales returns or returns inward journal. That is what we use it for. And I say the accounting entry here, the accounting entry is 1. Total value is transferred to the debit of returns inward account. And the second entry is that various customers accounts are being credited with the value or amount of goods returned. Okay, so that is the sales return. Let's go look at this example together. Return from Henry 1 bag of sugar at 14 naira each, 3 plates at 140 naira each. Return from Musti 3 shoes at 65 naira each, 2 packet checks at 20 naira each. Trade discount at 10%. Let's see the recording, and this is a solution to that. As usual, we have our dates. We have our date. We have our particulars. We have our folio. We have our details. We have our details. And finally, we have the total. Okay, let's start with the question. The year is 2014, January 3rd, and the first customer we're dealing with is Henry, and here we have one bag of sugar at 14 naira each. At 14 naira each. So that will give us 1 times 40, that is 40. Then 3 plates at 140 each. That will give us 3 times 140, 3 by 140. So 140 times 3 give us 420. Give us 420. So Henry plus 40, that is 460. From Henry, 460 worth of goods is being returned. So this is a return inward ledger. Okay, so that is all for Henry. Then 2014, the next date is 30th February. That is February. Okay, that is January 30th. Return from Musti. So the customer Musti, what was returned from him? 3 shoes, 3 pairs of shoes at 65 naira each. At 65 naira. 65 naira each. That will give us 3 times 65. Okay, and that is 195. So 195. What do you have there? We have 2 packet shirts at 20 naira each. 2 packet shirts at 20 naira each, and that is 40. If we sum this together, we have it as 235. So less trade discount of I think 10% trade discount. That is approximately 24. When this is being deducted, we are going to have 211. The total of this, I have to pick, that is 460. 460 plus 211. Okay, 460 plus 211. That will give us, sum it together, plus 460, that is 671. So this is a transfer to returns inward account. So that is it. So you come here, quickly prepare returns inward account. We said it will be what? It will be debited. So that is January 31st, the last day of the year, of the month rather, sundry. We have it as 6. We have it as 671. Then the various customers' account will be credited with their various value. So here we'll be having the first customer there is Henry account 2014 January. What date did he return? On January 3rd, he returned a total sum of 480. Total sum of 460. He returned a total sum. So returns inward. Returns inward. $460. Then Musti, (2014) January 30th. It's January 3rd. We have returns inwards 211. So that is the value that is returned. So this is how you prepare your returns inward accounts.